Meanwhile, new leadership is taking the wheel at ride-sharing giant Lyft, which initially drove shares higher today. Then the stock shifted to reverse. As you can see, how about 3 puns in just one?
I was going to say, this is impressive.
Really good, man. Down 7%. Their new CEO, former Amazon executive David Risher, said today that Lyft is, quote, not for sale. And as you can see, shares are down 7%. Meanwhile, Lyft co-founders Logan Green and John Zimmer will step down from their management positions. Green and Zimmer will stay on as chair and vice chair of the Lyft board. So what does this mean for investors? Tom White, he loves a good pun or two, I hope. He's a senior research analyst at D.A. Davidson. Good to see you, man. So we'll circle back to the no sale, but let's start with the new leadership. What does it mean for investors in Lyft?
Yeah, look, I think it's, first off, thanks for having me. Look, I think it's a little too early to tell ultimately what it'll mean. You know, our initial take is that we're inclined to view it as probably a net positive, albeit a modest one at this point. I think, it's probably about the right time for Lyft to get some new perspectives, potentially broaden the kind of strategic aperture of the company a bit. If you think back to kind of the DNA of the company and the co-founders specifically, it's a management team that really was, very focused, singularly focused on disrupting transportation and kind of sticking to that part of the business, even while some of their competitors were kind of leveraging a rideshare business and expanding into other adjacencies. And that's, clearly worked out for companies like Uber. Lyft has kind of really had a more narrow focus. We think a new management team may help kind of broaden the focus a little bit and hopefully find new ways to create value for this company.
Tom, what do you think the top priority should be for new management?
Well, I think that's a bit of the problem. I mean, it's not necessarily, what he can or can't do. It's sort of how much it'll cost and whether it'll cause sort of a further reset of kind of the profit targets that investors have kind of come to expect. This new CEO, David Risher, it's been a while since he's been, kind of in an operational role at a publicly traded company. He was at Microsoft in the 90s. He was at Amazon kind of around the turn of the century and left there in 2002. Since then, he's been primarily kind of working to advance literacy globally, which is obviously a very worthwhile pursuit. But doing so as the head of a nonprofit, and he's had some other board seats. Apparently his skill set is really about execution and kind of the minute details that need to be ironed out to get a marketplace really humming. I guess there's probably a little bit of room for Lyft to make improvements on kind of the marketplace operations part of their business. But I don't know that any of that stuff is like a huge needle mover. I think a bigger needle movers would be kind of more creative approach around new products, maybe getting aggressive with new partnerships, and maybe exploring other kind of novel ways to create value like a sale or some sort of transaction.
Yeah, he says, I don't want to get in the car with someone that's just delivered a pizza, so I guess we can rule out food delivery for the near future. He said it's not for sale. Does that mean they won't pursue a sale in the next couple of years? What would that mean to Lyft? And can you throw out any names that might be a potential buyer?
Yeah, look, it's a publicly traded company, so even if he says it's not for sale, it's technically for sale every day. The thing to keep in mind here is that they do have a dual class structure for the shares, and because of these super voting Class B shares, Logan Green and John Zimmer control something like almost 33% of the vote. So, for the company to be for sale or to decide on selling itself, those guys would presumably have to be on board most likely. In terms of potential acquirers, I think you're looking at the large kind of consumer internet platforms here in the U.S. and you're also possibly looking at some of the large global auto OEMs. And coincidentally, both of those groups include companies that are focused on autonomous driving, self-driving taxis specifically. So names like Waymo, which is part of Alphabet. So again, some of the big auto OEMs would appear to be the most likely in our view. Given the pullback in Lyft shares over the last several quarters, it's only about a $2.5 billion enterprise value at this point. Maybe you get some kind of less obvious strategics that would be interested, but we don't view a kind of a transaction or a sale process as imminent in any way. But never say never.
Tom White of D.A. Davidson, thanks so much. Again, Lyft shares off just over 7%.